AMD just reported their latest earnings report. Stock is down around 6 to 7% right now, despite the company actually beating estimates. And next quarter guidance was actually met. So you might ask yourself, what exactly has happened? Well, first of all, it might be something with regards to valuation, because if we look at forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth is actually the cheapest one here, just over 1. But all the rest, you might say, okay, it was maybe already trading at a premium. A lot of it was already baked in. And so high expectations, they were met. Slight beat this quarter, no beat for next quarter. And so, okay, maybe the stock needs to trade at a cheaper price. Could very well be. Supermicro Computer also reported their latest earnings. Stock is down 15% at the time of making this video. I know it says down 7%, but it still needs to update. It's actually down closer to 15%. Maybe that is having an effect on AMD as well, because Nvidia at the time of making this video is also down around 2%. So you have to take all of that into consideration, but of course, we're going to have a look at the numbers in just a second. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, really appreciate that. We're trying to cover many companies during this earnings season. Yes, I'm going to cover Pinterest, Lemonade, Supermicro as well in separate videos, probably tomorrow before the market opens. So I appreciate all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with a couple of comments here. One from Lisa Su, AMD Chair and CEO, and then from the CFO. So we deliver strong first quarter results with our data center and client segments each growing more than 80% year over year, driven by the ramp of the MI300 AI accelerator shipments and the adoption of their Ryzen and EPYC processors. This is an incredibly exciting time for the industry, as widespread deployment of AI is driving demand for significantly more compute across a broad range of markets. We are executing very well as we ramp our data center business and enable AI capabilities across our product portfolio. As for the CFO, AMD started the year strong, delivering record quarterly data center segment revenue. In addition, we drove solid gross margin expansion. Moving forward, we are well positioned to continue driving revenue growth and margin improvement while investing in the large AI opportunities ahead. Moving on to the summary year P&L on a GAAP basis. So revenue was up 2% year over year, down 11% quarter over quarter. Gross profit up 9% year over year, down 12% quarter over quarter, with gross margin actually up 3 percentage points year over year and flat quarter over quarter. With regards to operating income, of course, we know last year was not such a great year. That's up 125% year over year, down close to 90% quarter over quarter. Then with regards to operating margin, up only 4 percentage points year over year, down 5 quarter over quarter, with net income coming in at $123 million, up 188% year over year, but down 82% quarter over quarter. Approximately the same thing here with regards to earnings per share. Then with regards to these segments, so as they said, data center net revenue is up 80% year over year, quarter over quarter only up 2%, operating income up 266% year over year, down 19% quarter over quarter. Again, with high expectations, maybe they thought that quarter over quarter it would be up more than just 2%. As for client, we've seen the strength already with Intel, so that is up 85% year over year. We're seeing a recovery there because again, last year was quite a bad year. Quarter over quarter is still down 6%. Operating income has improved quite significantly, up 150% year over year, and even quarter over quarter up 56%. With regards to gaming and embedded, we knew we were going to see some weakness in that. So with regards to gaming, net revenue is down 48% year over year and 33% quarter over quarter. Operating income down 52% year over year and 33% also quarter over quarter. With regards to embedded, as we've seen with Intel, as we've seen last quarter as well, net revenue down 46% year over year, down 20% quarter over quarter. And so operating income is down 57% year over year and 26% quarter over quarter. Now, there is some good news with regards to the data center segment. So they say here that record data center GPU sales with MI300 surpassing $1 billion in cumulative sales since Q4 2023 launch. They are also raising their outlook with regards to data center GPU sales for 2024 to $4 billion. That's up from $3.5 billion. Again, positive, but maybe the market was expecting a bit more, seeing that, well, we've been hearing about AI and demand and GPUs, etc., for so long. We've seen what NVIDIA has delivered. Maybe the market was expecting a bit more from AMD. Then with regards to the client segment, so revenue being up so much, that's primarily driven by AMD Ryzen 8000 series processor sales. And so with regards to operating margin, that is primarily driven by higher revenue. With regards to the gaming segment, it's down due to lower semi-custom and Radeon GPU sales. And here the margin, well, the opposite effect of clients, so primarily due to lower revenue. With regards to embedded, same comments here as we've seen with regards to Intel. So revenue here is down primarily due to customers continuing to manage their inventory levels. And so operating margins here primarily due to lower revenue. Then with regards to financial outlook, they expect Q2 revenue to be at around $5.7 billion and gross margin at 53%. The last thing before looking at the graph, so free cash flow for this quarter came in at $379 million, free cash flow margin of 7%. Yes, it's better than previously, 4 and 6%, but really nothing to be raving about as of right now. So looking at the graph right now, we are going to see if it can hold up above the 200-day moving average, which basically sits at, well, the price we're at today, or just $1 lower, 144.5%, which will also mean that if we open at that price, the stock will be officially down exactly 36.5% or so from the highs that we've seen here back in early March. Of course, this means that everything we've seen at the start of this video, force PE, EV to EBITDA, all of that will come down significantly. So yes, this company will trade at a cheaper multiple for good reason. It was trading at a premium because previously it was growing quite fast. Of course, year-over-year comparisons are quite easy, but with all the momentum, with all the hype around AI, GPUs, data center growth, etc., although data center for them still doing quite well, is it worth all the premium? Is everything else that is not growing as fast, that is not as profitable as before or as NVIDIA, for example, is it worth paying that premium? In my opinion, the market is saying to you right now, no, it is not. Maybe in the future, maybe we're going to see a reacceleration in the back half of the year, remains to be seen, but currently it seems like the market is not that convinced. Plus, yes, on Tuesday the market was red, on Wednesday Jerome Powell might speak, might crash the market, might not, remains to be seen, but again, you're investing here in businesses for years and years to come, not in some prediction of what might happen next week or next month. So overall, that's about it. Do share your opinion down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.